All right, let's take a look at our end of day. Way below the market maker's expected move here. Quick move down towards the technical support level at 58.32 on SPX. Below that is major support at the Jan low 57.73. Yeah, just moving pretty much straight down all week. We did get a little bit higher open that failed. We'll see if we get some recovery in the overnight session. 58.50 locally could maybe be a point at which support is attempted. I don't know if it'll succeed though. We tested 58.78, which has been a strong support on futures previously, back on Jan 2nd, and also again on December 20th. So this level could matter, but I think the more important levels are going to be to the downside at like 58.06, especially with our failure being so close to spot. Like there's quite a lot of room for us to move down at this point. The dollar moved up pretty strongly today on the tariff news and announcements of tariffs against Mexico and Canada. Yields started to come up, or at least reverse their downtrend alongside that move up in the dollar. Commodities still really underperforming. Energy bouncing back, but now precious metals and materials are kind of falling away. So, a lot of give and take there is leading to pretty consistent downside in the commodities indexes. Correlation on the 1 month is breaking down very, very rapidly and quickly outpacing the rise in correlation on the 3 month. This is not a good sign. I mean, generally speaking, 3 month correlation will catch up eventually. But this is pretty consistent. If you look at our breakdowns in correlation over the last year, they haven't really, aside from August 2024, they haven't really been like a consistent trend. Most of them, correlation snaps up and then it gets shorted right back down again, or like dispersion comes in and it pushes back down again. So this is pretty. I think this is pretty significant that it's just moving up and not small moves each day. So it's kind of like a flight out of dispersion market wide, and obviously that's very bad for risk equities, which are propped up by those dispersion trades. Forward yield on volatility at the end of the day, 9.5%, quite a bit higher than yesterday. Also substantial because this is our third consecutive day with the positive yield on volatility, or the positive a positive yield on the forward convexity of volatility being positive. That's kind of important. The dollar did move up there, which kind of takes a little pressure off of the carry trade. Not a lot. It only moved up like 75 bips. It'll need to move up quite a bit more to relieve that pressure, and then the risk of a Japan rate hike again is still on the table due to their rapidly increasing inflation. Bond volatility getting a little bit closer to 100 on move. Still hasn't got there quite yet, but again, we're seeing that consistent trend up in 3 month correlation that usually kind of coincides with that. Skew fell again today after turning around a little bit yesterday. Well, it fell again yesterday after turning around a little bit on Tuesday. That's going to be kind of significant. I'd imagine we continue to see that fall as we get deeper and deeper into those out of the money tail risk hedges that were in so high demand back when it was at all-time highs. 54% of the S&P its 20-day moving average, and what we're seeing is actually a decent amount of stability in breadth, but we're seeing tech sell off very, very hard at a significantly faster pace than we're seeing the S&P fall off. And big move up in volatility today. VIX very, very much in backwardation with the forward contract on VX. And we're seeing correlation fall apart as the near-term volatility starts to rise above, the forward expectations for volatility. And while volatility is in backwardation, that encourages people to continue going long vol. So keep an eye on that. It's very important. Not too much of a change in Fed fund futures, but getting closer and closer to a rate hike. The bear steepener did turn around in the back half of today, moving up 16% after several weeks of decline, 3 weeks of decline. Tomorrow's PCE print, if it comes in hot, especially on the core value, could pretty dramatically affect this. And remember, one of the reasons we look at this 10 2-year spread and we look how the yield curve is steepening between those is because, this is generally a very clear indicator of recession. So if you go back over the years, this was the early 90s, dot-com bubble, 2008, COVID crash, and we're getting really close to that bear steepener picking up to those, recessionary, depressionary levels. So definitely something worth watching every day. It's not, when that steepener is pushing up, it is definitely not an indicator of bullishness in the bond market. On the technical side, obviously we rejected off of the retest of the 50 MA. We've fallen below this trend. The next one of some importance is this trend that acted as support in November and Jan of this year. And that would be about 58.32. That's why I mentioned that level before. Pretty close to where spot is now. Probably fairly close to our downside target. If that slips, that is the last of the fairly significant, downside trends on S&P, and a loss of 57.73 would, or 56.96. Both of those levels are pretty important. I would say both are confirmation of a larger move down below the 200 moving average here on the daily, and so you're talking price targets at like 53.90 or even back to like 5100 or so. Obviously in the event of a crash or something we could go beyond that, but those are where I would say that a correction is possible too, especially given the risk in the market now relative to where we were a few months ago. Anyway, yeah, well, eventually buying the dip will be a great idea. You just don't want to buy it too soon. No reason not to confirm a reversal before buying in. There's always plenty of profit to the upside of that. Anyway, tonight we're going to have another Gamma Strike Roundtable. We've got a lot more new users this week, so that'll be here on the YouTube. But if you guys want to join in the Q&A, that's over on the Discord. It'll be me and some of the developers and the quants, and we'll be taking your guys' questions on Gamma Strike, how to use it, upcoming features, things like that. So that'll be at 9 p.m. Eastern tonight, and we'll see you guys all there. Thank you so much. Later.